reason is that I was caught up in a meeting up until about 5 minutes ago. Sorry about that. Now, let's take a look at the markets. We're starting to see the dollar, as you know, on Friday last week, saw a bit of a squeeze on the dollar. And if we take a look at the dollar index, you can see how it actually recompleted this massive either ascending triangle or head and shoulders, depending on how you view it. Because you got yourself a head here, which is the January 10th low. You got yourself a left shoulder, which is November 19th low. And then you have yourself a right shoulder at the March 20th low. So this gives you the left shoulder, the right shoulder, and the head. And we had a break here already on April 24th. That failed. But now we have a recompletion. And this suggests we can go up to about 147. Now, this is a bit of a choppy market though, and we had a lot of false starts, and we could probably have more false starts. But as you probably notice yourselves, the market are starting to change the way they behave. You're not seeing the price decline just a small amount and then bounce. You're starting to see some very strong moves. And you can see that in the pound yen, which I suggested to you guys to be that I was bearish a few weeks ago. You can see that in the Aussie dollar. You can see that in the New Zealand dollar. You can see it in the GBPUSD. The only sort of pairs where there's not a lot of activity is the dollar CAD, is the EURUSD, and the dollar yen. But all the other ones, there's some activity there, which makes it much more fun to trade if you're a trend follower the way I am. On the other hand, everybody that's been buying, they get it wrong the first time, and then they buy a bit more, and then they buy a bit more on the idea and hopes that the price is going to revert back to the old range. A lot of these people are now in trouble and probably floating some losses. And we'll see what happens going forward. We might go back range trading, but the way things are going now, it doesn't look like we're going to do that. So this is the euro. So we talked about the euro and selling at pretty much 112.21. The idea was to sell up here and for the market to go down, which it did. So again, this one is a very sluggish one, and maybe it could be a bit wise to close out half of the position. If not, well, yeah, half would probably be good. And I'm looking at this today, and the question is, what should we do? Should we reduce the risk a bit? Probably a good idea. So we can probably reduce it a tiny bit to the May 14th high. So you would literally cut your stop loss with half. And then we can probably, if we swing up to 111.97, and in fact all the way up to the old sell zone, but as long as we don't trade above 112.45, I think this is a bearish market. So I want to continue to be bearish below 112.45, and up here is the trend finding level, which is the same as the stop. GBP versus the USD. So relentless decline. So it looks like Theresa May is going to try to do as she's been doing before, put forward the same deal, and Labour has said that they're not going to vote on it. So I'm not sure really what she's up to. If she's going to put forward the same deal again, Labour telling them she's not going to vote, it's not going to work out. I'm not really sure what's going on over there, but it's not really professional. Again, I guess she's just optimizing what she can do, but it's unfortunately, I don't want to get too political, but Brexit, it obviously is a big thing, right? So if they can't, one party can't push through things, you just need to sit down and talk and work things out. Again, anybody that's been in any sort of committees or anything like that know how difficult that is. Even myself, my own experience with the committee we have with all the homeowners, getting everybody to agree there, that's a hassle. It takes weeks. So it's a difficult situation. I don't envy her, but it looks, at least now, that they're gonna get more of the same, and then we'll just see what happens. As for the investors, they're clearly giving up on the pound. So they've been selling and selling and selling, and that's why we're having these declines without any significant pullback. Usually you would have at least a bit of pullback so you can sell into the downtrend here, or in case of an uptrend you have a bit of a pullback so you can buy into it. But now people just been very, very scared and sort of just dumping their pounds. Now, I don't really think we should get too excited, but if you look at this is a head and shoulders with a left shoulder, and then you have our right shoulder, and then you have the head, and then you have the neckline here, and the difference between the head and the neckline actually is like that. So this could be your potential target here. Now I wouldn't get too excited. You have all these different lows here, so there's better dollar pairs out there with less restrictions, so less lows to sort of stop you on the currency on its path. But I would definitely continue to be bearish. Now the biggest issue here is that, you know, it's a bit difficult to sort of figure out where to put your stop loss. Why is it difficult? Because if we look at the 4-hour, you can see that the last major high of consolidation phase is up here. So that's sort of the next natural level. And I'm looking at this today, and this morning I thought we can probably bottom out here. But looking at this today, I think we can have more of a squeeze. It's very typical. You have like a bearish week, and then the market sort of turns bullish afterwards. And I'm gonna change things up here because we didn't touch that sell zone yet. But I'm thinking realistically, it will probably go up to something like 128.29. I'm not saying it will go up there, but if it does go up there, I think people will be much more keen on selling. And I think they're fine to be bearish below something like 129.30. I think that's fine. You have that important low on the daily there. So you have a retest of this head and shoulders. So probably upwards, at least to, I think, 128. But ideally 128.29, and then from here turning bearish. Dollar versus the Japanese yen. The market, as you know, traded above. So it's been trading in a little downtrend and then traded above the highs here, and sort of caused us to end that little downtrend. And we're having more of a consolidation phase. It doesn't look like it's gonna break either bullish or bearish anytime soon. Rather more sideways price action. People don't really know exactly what to do. And of course, if we trade below something like 109.03, then the market could trade a bit lower here. Let's trade down here, it could probably go down and maybe lower like that. Let's finally just push into the upside. Gold prices, sharp decline. So as you know, that bullish view we shared with you guys was stopped out on Thursday last week. And then on Friday, we had a continuation there because the dollar is having a bit of a seeing a bit of a revival, a bit of a boost. Now, I still think we're stuck within that wedge, and I still think we can trade sideways for longer. Obviously, you still have a bit of bearish bias here. So maybe we'll trade below the low, but I can't really see anything tradable here. However, though, take out the low, and I think we can start to target something like at 1241, which is this level down here. And alternatively, if we take out these levels up here, I think it's time to turn bullish. So keep an eye on the 1266 and 1303. Crude oil prices were up slightly on the idea that, you know, we have geopolitical tensions between the US and Iran, where the US is being really, really hawkish, and Iran as well. But there's not going to be any war. I don't think it's going to be any major issues. I'm thinking here 61.89. You know, I want to be bullish about that level, and have a little rectangle with a break to the upside, going towards 64.77. So I think we can probably go upwards to that level as long as trade about 61.89. And I'll remain bullish for now. Just bear in mind, this is a short-term fragile little rectangle. It started to form on the 2nd of May, and then you had a breakout on the 16th of May. So actually not that short. That's not very small short-term, but I suspect it can be more consolidation here. S&P 500 remains bearish below 28.91. So I still think we can go down, and it's forming a bit of a head and shoulders with a big head left and a right shoulder. So I'm continuing to be bearish, and if we take out the high, then yeah, we could probably trade upwards. But I think realistically, it's going to be choppy here, potentially head and shoulders on the break to the downside. That's my main idea, that we take out 27.85, and then the market sort of tumbles down. If indeed this is a head and shoulders, then we have about a 5% decline from the lows, so we could go down about 50% correction. So you're looking at something like this. That's my main scenario. So reverse here, go lower, and then trade lower. Alternatively, take this out, and in fact, I'm gonna delete this here because it's just gonna become a mess here. It's just gonna be, everything is just gonna be messy within these two levels. And my preference there is that let everybody else get chopped up, and then what we do is that when and if we trade to the downside, I think it's time to engage. Alternatively, take out the the 2019 high, and then it's time to engage again. Now, this is a German DAX, and it's a bit difficult. Like, I personally think the US stock markets are probably going to trade lower. I also think that, the Chinese stock market is going to trade lower. So I want to be bearish, but the German DAX here is fighting back and is doing that quite good. And took out my trend defining level here, I think on Thursday last week. And now, looking at this, I think the trend is short-term bullish above 11,842. So it might go up and go down a little bit, but then I think from here we're probably gonna bottom out. But I'm not very convinced about this idea, and I think you just need to make a decision here. Do you think maybe looking at other indicators or other things that could potentially help you, but you need to make a decision here if you want to trade here? Would you want to trade this market on the long side, or you want to align yourself with the bears? That's what I would be focusing on. And I think that's pretty much it. We just covered all of the main markets. If you wonder why my shirt is so white and my head disappears there, it's just because I managed to ruin the blinds here. So we're having the sun in my face. Guys, do you have questions? Let me know. So we have Mr. Hyder here. Good morning to you, sir. And we have Hi as well. Marvin as well. And we've got two questions here. What's my view on the Aussie dollar following the Aussie election? And Hyder is asking about the Dow. And Nico says hello. Good morning to you guys. Thanks so much for joining. I think for tomorrow I'm going to bring my sunglasses. I'm definitely going to need them next week. Next week I'm away, by the way. So I'm away for the whole of next week. Monday as well is a bank holiday. So it wouldn't be in any way, but I'm going to be in Rhodes, Greece, enjoying good food and sun and the beach. Now, what are we going to do? Well, first question about the Aussie then. So I have not read up on the Aussie properly, but as I understand it, conservative liberal, I'm not sure if that even makes sense, but conservative government is now in control, and as far as I understand, the pro-business, they talked about tax breaks, and remember from Donald Trump, he did all these tax breaks and things like that to boost the economy. Now, I haven't gone into, again, all the details of what the new government would like to do, but the way the market has reacted is reacted by lifting the Aussie dollar upwards, right? So they think that this is going to be good for business. And I would need to look into that, and I suggest you as well look into that. If it looks like there's no real change going to happen or minimal change, then I will just continue to be bearish. Now, I am bearish below 70 level. So below that 70 level, I'm going to be bearish. Before I've been bearish here. But because of the situation here with the markets, I think with the election, we might get a bit of a squeeze. But I'm still bearish between 69.35 and 70. And I still think we can revisit that flash crash low. But you need to read up a bit. I didn't have time, unfortunately, to see, are they going to make some real change? Are they really like sort of hawkish as Donald Trump is or has been? If they're not, then we don't have to worry. We just remain bearish. In regards to the Dow, so the Dow Jones looks like this. So this one was pretty much the only one I wanted to be bullish on. And the market has bounced to the upside. It did bounce from the buy zone, but we haven't had too much follow through. And for now, I mean, technically, it still remains bullish, about 25,231. But it looks a little bit like a head and shoulders with your left and potentially a right shoulder forming and your head. And it's not just here It's the French stock market, it's the FTSE 100. They all have the same pattern, and it's the Chinese stock market as well. So everybody's sort of worried about the same thing, and all these different markets are showing similar pattern. So if we take out 25,231, I think it's time to turn bearish. If this indeed now is a head and shoulders or form to that, then again you're looking for another 5% here. And it wouldn't be unsurprising. As I understand it, obviously we might have new tariffs introduced on China in the next by the end of the month, as I understand it. If it doesn't, what's going to happen here is that there's going to be 25% tariffs on all these different products. So there's going to be less demand from China, and as well, the Americans that want to buy things from China, they're going to pay more for it. So you'll have inflation, so people have less money to spend suddenly because they need to spend more money on the same thing they could buy cheaper. But now it's at 25% on top. And at the same time, the Chinese are not going to be able to sell as much as before. Now, what is interesting is that industrial production from China had a huge bounce. I think it was in huge bounce in March, I think it was. And then in April, those figures sort of retraced back all of that gain in industrial production. So we're still in modest growth of industrial production in China. And industrial production is important for it's an indicator that it's a good little gauge of what's happening in the economy, because they're an exporting nation, China. So what's happening there, I think, is that with new additional tariffs kicking in, it's likely that industrial production, all of this continues to soften, right? And with that in mind, the Chinese PMI figures are going to start to come out bad again, most likely. People are going to get worried a little bit about what's going on and how that's going to influence the U.S. And you got those worries. So if I'm right about that and economic data again starts to deteriorate, then I think we will trade below this level and we will probably trade lower. And we might actually have some sort of recessionary environment, as a lot of people projected. Well, they started to project that in December. Obviously, you have people being bearish for a long time. There's some people that have been bearish for a very long time, and they sort of said, we're probably going to go lower, and they were right, but it took up until September, and they might be right again, I'm not really sure. It really depends, because if they go ahead with a deal, firstly, all tariffs removed, plus suddenly things are, you can't sort of reduce, you can only reduce tariffs, but suddenly you can have more business on the back of that trade deal, and so it could be positive effect, and that might happen at one point. I think that's the ultimate target of Donald Trump, which makes perfect sense. He is a pro-business man. That's what he is. So I think if they get this deal through, that could help. Okay, I think we're going to wrap things up. Guys, thanks so much for watching. We have 14 people watching, but just 3 likes. So please hit that like button. We have about 70 to 80 people that watch this video every day. I know some of you guys have not signed in. If you do sign in, and do like the video. If you don't have an account, I understand. I didn't have an account before either. But it's really important that you sign up and support if you like this presentation. It's really, really important. Very simple, doesn't cost a thing. Click on that button, and then you can share it with your friends or in different forums. So if you participate in forums, things like that, you can share the link. If you want to share the specific episode, you can also just copy the link up there. Okay, I think we're gonna wrap things up. Nikos, hi there, hi, and Marvin, have a good day, guys, and I'll see you guys tomorrow at 9:30 a.m. here at ATFX YouTube channel. Thank you, and bye-bye.